This is FinTech Futures at FinovateFall, and I'm joined by Bill Verhelle of QuickFi. How are you?
I'm doing great. Nice to be here.
Excellent. Well, just to get started then, do you want to give us a quick introduction to yourself?
Sure. My name is Bill Verhelle. I'm the CEO of QuickFi, which is a company, innovation. It's a lead product of a company called Innovation Finance USA. And we have a FinTech platform that allows small and medium businesses to acquire equipment and finance it in a matter of minutes instead of days or weeks, which it typically took.
So your team's here to conduct a demo session then of the platform. Can you tell us a bit more about what you're offering and the developments you're looking to showcase this year?
Sure. We're really excited to be back here. Last year was the first year we were back at a live event, and this year it's so much bigger. I think it might be the biggest Finovate ever. And we are excited to show off our newest version of the technology and some of our new partnerships and some of the new capabilities of the platform.
Excellent, excellent. So what are some of the main benefits then for customers and OEM partners looking to use the QuickFi platform?
Yeah, there's a host of benefits for both. For the partners, which tend to be either global manufacturers or banks, they're able to sell the equipment that they make much quicker at a higher margin and deliver a much better customer experience. You know, when you buy equipment, a big part of that experience often is the finance experience, which is part of the process to buy the equipment. So by turning it into a simple process that the borrower can do on a mobile device in a matter of minutes, it tremendously enhances the experience for the customer buying the equipment. On top of that, the OEMs can control the financing terms and conditions that the borrower gets so that they get a very fair deal with full disclosure and a straightforward transaction. And then the OEM also gets all of the data. So they're able to have the information about all the customers that are in repayment to help with future repeat business sales and to help with upsales. And of course, for the borrower, there's a whole host of benefits too, but basically it's just super transparent and fair. No fees, no hidden cost, disclosed interest rate, even though that's not required by law in the US. So it's really a good deal for the borrowers, and that's why manufacturers that are really concerned about the customer experience are adopting our platform.
Excellent. So with global digital transformation efforts then, are more firms looking towards technology for cost efficiency and will banks have to adopt a lower unit cost in the future?
Yeah, we think so. You know, one of the things we weren't sure about, Paul, when we started this was what the unit economics would be. And it's proven out that right now we're offering the platform at less than a third the cost that it currently costs companies offering equipment finance per transaction. We think we're going to be able to take that to a tenth the cost. And what we've seen in other industries is that when you get that unit economic advantage, it really drives adoption because companies really can't wait back on the old platform.
Okay. So looking to the future then, how is QuickFi looking to evolve and what areas are you looking to target specifically?
So right now we've had a lot of success in a couple different segments in the U.S. economy. We do a lot with construction equipment. We do a lot with manufacturing equipment. A big company in Europe, you might know, Atlas Copco, does all their U.S. financing on our platform of their compressors and industrial equipment. But there are a whole host of areas that we really have only begun to penetrate. We're working with some tech companies on technology finance platform, some healthcare companies with equipment that they sell to doctors and dentists. We have office equipment. We really don't have any programs yet with office equipment. We're talking to some big manufacturers. So we have a whole bunch of new areas we're moving into. And probably most exciting of all, we've started talking to banks. So we're going to start partnering with banks and moving some of their business onto our very efficient online digital platform.
Excellent, excellent. Sounds good. And I mean, given the current macroeconomic environment with inflation and firms looking to tighten their budgets, how's the year been for QuickFi so far?
You know, I think that actually helps. We were a little bit nervous and apprehensive, I think, like everyone, not really knowing, and there's a certain amount of uncertainty still. But I think sometimes when things change, either for the better or for the worse, that causes companies to rethink the way they're currently doing things, and that's a bit of a requirement for people to adopt our platform. It's a different way of doing business. It requires someone to consciously make a change. It seems like a lot of companies right now are struggling to even hire the employees they need to grow their business. In addition, they're under a lot of pressure to cut costs, and our platform really solves both of those issues.
Excellent, excellent. And I mean, with QuickFi being 100% self-funded as well, what's your take on the current state of startups and venture capital and fundraising at the moment?
Yeah, I guess I'm not really an expert in that area, but you probably might know that we had started another company which we also bootstrapped and funded ourselves, and we didn't raise any outside capital, and it grew over a couple decades to be a very large financial services company. Um, it, I think we're not against raising outside capital, but for us, it was more about really solving the problems and addressing the issues in a very subtle way to build an entirely new business model and an entirely new technology platform. And hiring a ton of people to go really fast was less important than figuring out how to do it right. So there just really, for us, hasn't been a need, and I think that puts us in a good position. We funded the company ourselves for the next couple of years, so we're in a very solid position as we roll forward.
Sounds good. I mean, given the boom in investments that we've seen so far, I mean, do you think that overall at FinTech valuations are currently overinflated at the moment, or?
I guess I would say that it seems that a lot of money has flowed into some investments, adjacent to our space. Maybe a surprising amount. I mean, if you look at buy now, pay later and how much funding there's been in that area, that was something we didn't really fully understand. Relatively simple concept, right? Yet it's attracted a lot of funding. So I think there's certain inefficiencies with the model, but again, I'm not really an expert there.
Excellent. So to finish off then, what do you think the near-term future looks like for the industry in the whole? Is there any developments that you're particularly excited about?
Yeah, we're super excited. When you think about it, in the U.S., and I'm sure it's the same way in Europe, the small businesses drive the U.S. economy. And the reality is in the U.S., I think for a long time, small businesses haven't really necessarily always gotten a fair shake. There's been all sorts of consumer protections for consumers that didn't protect the small business. And it could be the same person who's doing a consumer loan one day and then doing a loan for their small business the next, and they lack all of those protections. And as a result of that, there really hasn't been fair financing to help these small businesses grow their companies. And that's really at the heart of the success of our country, right, is helping these successful businesses with a good credit history get the equipment they need to hire more people and to grow and to support their communities. So we really feel like it's good work that we're doing. We're really helping in a public policy way companies that deserve to be helped, and we think taking the friction and cost out of getting that capital to the right businesses is a worthy initiative. So we're full bore ahead, and we're really excited.
Excellent. Well, thanks so much for talking to us, Bill. It's been great to see you.
Thank you for having me. It's great to see you again.
Thank you.